So Skeena Gold and Silver, we've had an extremely exciting start to the year with the receipt of all major permits to initiate construction at SK Creek. This is a significant milestone for us, and we have a very clear line of sight to production and cash flow by Q2 of 2027. Before I get into the big presentation, I want to leave you with the main investor highlight for Skeena Gold and Silver. So that is our value proposition is that we are on the verge of a transformation of going from a non-revenue generating company to a very, very profitable company in the next 4 or 5 quarters. So we have leverage to rising gold and silver prices, but we also have tremendous alpha in making that transformation. So that's the key takeaway. Okay, so I will be making forward-looking statements. You are duly cautioned. And yeah, back to the permitting piece. We know that permitting a mine in BC and permitting a mine in Canada is a huge undertaking. Since we started the company 10 years ago, we have always put our relationship with the Tahltan Nation as a top priority. We're very proud to be the first company in Canadian history to have an Indigenous government authorize our permits together with the province of BC. So we concluded that entire process just this February, and that represented the starting gun for a number of investors who were waiting to have that kind of behind them before they enter the name. And we have that clear pathway, that clear runway to production and cash flow over the next 4 to 5 quarters. Taking a step back and looking at the investment thesis. So this was formerly a high-grade underground gold and silver mine with Barrick. And we, the management team at Skeena Gold and Silver, is reconceptualizing this as a very sizable open pit. So we are targeting an annual production rate of 450,000 ounces of gold equivalent metal. So very sizable. It's backed by a remarkable grade. This is one of the highest grade open pit mines globally at 5.5 grams per ton, triple the global open pit average. These types of grades lead to very low operating costs, and low operating costs lead to a lot of cash flow. So at spot prices today, we're going to be doing $1.8 billion in after-tax free cash flow per year in the first 5 years of production. So we're talking monster cash flows. And we were fortunate enough that while we were waiting for our permits, in parallel, we were also proceeding with construction. So as it stands of today, the project is about 50% done on the build. So a lot of de-risking. And if you look at the trajectory of the company, permitting risk is behind us. Discovery risk is behind us. Financing risk is behind us. So really from now till Q2 of 2027, it's all about execution. It's taken us 10 years to get here. We've done multiple iterations of technical reports, the latest one being the definitive feasibility study that came out in late 2023. I mentioned this was a past producer, and we have significant infrastructure benefits from that. So Barrick left behind a fully permitted tailings facility. And also there was a private company that came in and installed 3 hydroelectric facilities 17 kilometers away from our mine. So what does that mean? That means that we can source power for 6.5 cents per kilowatt hour. So when you look at the combination of a super high-grade ore body with an extremely low cost of power, that is the best recipe for cash flow that a mine can have. The economics are phenomenal. At spot prices today, the NPV after tax in Canadian dollars is about $10 billion. The market cap today is $6 billion, so there is an inherent discount. We are coming out with an updated 43-101 in Q4 of this year, where we're going to be boosting that NPV even further as we bring in another asset into the production profile called SNIP and evaluate steepening and deepening the pit walls. So all of these economics are yet to be improved and drive value. The IRR is 115%, and our payback period is just shy of 8 months, including the ramp up. I talked about the cash flow. So $1.8 billion in after-tax free cash flow. You put any multiple you like on that free cash flow of, say, 6 times, and you get to north of $10 billion in market cap. Really shows how we as a company are looking at valuations in, 5 quarters as we get into production and cash flow. So the production profile is front loaded. We do have a plan in place to bring in SNP, which is also ex-Barrick year 7 and onwards. It very high grade ore body, 9 gram per ton. And the idea is that we would backfill those later years. So we don't have to say anymore, 450,000 ounces in years 1 through 5, but we can say something closer to 400 or 425 ounces years 1 through 10. So that study is coming out in Q4 of this year. We're going to optimize the mine plan. So yeah, the project is fully financed. We announced a financing package with a group called Orion Resource Partners a year and a half ago. The market loved it. It was very non-dilutive and allowed us to have a tremendous amount of flexibility to continue to improve the terms for our shareholders. We drew down on the gold stream last year that funded the construction schedule. And now that we have the permits in place, which is conditioned precedent for the senior secured loan, we can draw down on the loan. The interest rate is about 11%, and we have an option within that to swap it out if we find a more attractive debt option in the market. And that's something that we've been open in telling people. We're working with a group called KKR to potentially refinance that debt. We've been told that we can obtain a lower cost of capital, about 8.5%, and that'll be an imminent catalyst for us in April of this year. We also have a buyback provision on the gold stream where we can buy back 2/3 of it. We are very motivated to do so. That will all be part of the refinancing that we announce in April, where we will upsize the new debt and look to potentially buy back 2/3 of the gold stream. And here's just a look at what makes this asset so remarkable. It's a grade story. So you look at that 5.5 grams per ton equivalent. You can see we are second from the top in terms of one of the highest grade gold open pit mines in the world. We've got 4.6 million ounces in reserves, 80% of which is in the proven category. And so the reason why I'm speaking on a silver panel is because we also have a tremendous amount of silver. And this is the part that is really interesting because we're a world-class gold vehicle and we're a world-class silver vehicle. Now with silver prices going up and the ratio coming down, the gold-silver ratio, our revenue ratio is coming up. So we're going to be doing about close to 40% silver in the revenue mix now that the ratio has come down. We're going to be doing 9.5 million ounces of pure silver per year in the first 5 years. And if you know the silver space, you know that's a lot of silver. That's more silver than Aya. That's more silver than Chispas. And that's just our byproduct credit. So what it does is it allows us to propel our re-ratings going forward because the silvers can command higher multiples. And it's also very accretive to our unit costs. Couple of photos of the construction. So we started mining a couple years ago. On the far left, that's the road leading up to the pit. In the middle, that's the start of the pit. So predominantly, we've been moving waste rock to build out other parts of the project, such as the roads. To the right, there is the MRSA water collection pond, which is downstream from the mill, which will store water and then be further pumped out to the tailings. The process plant has been the start of the show. From September to December, we enclosed it. The focus for the winter months will be with installation on the interior and filling it up with the mills. And here's a look at some of the work. So we've laid down the concrete. To the left is the grinding mill pedestals. So the mills will be placed right on top. And they've actually arrived at the Port of Stewart and will be installed over the coming months here shortly. So here's a look at the Lassonde curve. As a single asset developer, our share price has followed it to a T. It's a rinse and repeat. It works every time. And with permits just in place earlier this month, as I say, it's just the starting gun for us to continue to climb this curve. If you look at some of the comps in the space with the cash flow that we will be spitting out, we are comparable to a company, similar to Alamos Gold. They have about a $29 billion market cap, and we will have similar free cash flows as them because of our grade. Shareholder support has been phenomenal. We're about 70% institutionally held. We've got 11 banks that cover us, with UBS recently launching coverage. 121 million shares outstanding, so very conservative. And all of the mining dedicated funds, as well as generalists with a toehold position in the stock, with the understanding that we will be on a significant re-rate over the coming months as we get into production. Thank you for your time.